Welcome to ForexTV.com. It's Friday, April 11th. I'm Remy Hickey for your New York Forex Market Buzz. In afternoon trade as of 1:30 p.m. Eastern Time, euro dollar is at 1.5806. Sterling dollar is trading at 1.9702, while dollar yen is around 198. U.S. equities are in the red with the major indexes down around 1.5%. Wall Street was not encouraged by the latest Q1 report, which surprised to the downside and did little to encourage the outlook for corporate profits as well as the economy. And ahead of the upcoming data-heavy week in the U.S., today's University of Michigan's Consumer Confidence Survey hit a 26-year low. The preliminary reading of the Consumer Sentiment Index for April fell to 63.2 from 69.5 in March. This afternoon, I'm joined by Omer Esiner, Senior Market Analyst at Ruesch International. Good afternoon, Omer.
Good afternoon.
Happy Friday, and thanks for joining us.
Thanks for having me.
Well, as we head into the weekend, the market awaits the G7 meeting and has been digesting the BOE as well as the ECB rate decisions. Now, the G7 communique is not expected to make any reference to specific currencies, but we are starting to see a slowing in the economies of the Eurozone and, of course, the UK. So ahead of the weekend and going into next week, if you could highlight the current fundamentals that investors should be paying attention to.
Well, clearly, I think the G7 is an event risk for currency market traders. I think that's why we're seeing the dollar firm a little bit here ahead of the end of the day on Friday. Excuse me. But going forward, I think the things to keep an eye on here are the extent to which the Eurozone economy moderates. I think we saw the euro come off a little bit on Thursday after ECB President Jean-Claude Trichet failed to meet the market's hawkish expectations in his post-governing council press conference. So going forward, I think the euro will be vulnerable to the downside if economic data starts to show a slowing economy, more so than we've already priced in. And specifically, I think if we see inflation start to ease in the eurozone, then we could see the groundwork start being laid for a potential rate cut by the ECB somewhere towards the end of this year. And I think talk of that will start to see a rebound in euro dollar, probably back down at least to the low 150s. In terms of sterling, I think we'll probably remain trade-bound against the dollar, given the fact that we are seeing quite a rapid slowdown in UK's economy. But I think the downside to sterling exists, and I think that would be played up if we see a faster pace of deceleration of the UK economy, such that the Bank of England needs to start lowering rates at a more aggressive pace.
Okay, well, Omer, it wasn't surprising to see the euro top record highs against the U.S. dollar and sterling in yesterday's session, and we continue to see euro strength against the sterling. But in terms of resistance for euro dollar as well as euro sterling, what levels are you watching?
Well, clearly right now to the upside around 159 is probably going to be the key resistance that we have to get through. There's a triple top forming around 159 in euro dollar, and I think a breach above that would probably see the euro make a test of 160 in the very near term. In terms of euro sterling, we have seen that currency pair test record highs recently as well. So I think at this point we're going to see a test of the record high once again probably next week. So probably again above 180.40 will I think will be 0.8040 will probably be the next key resistance for euro sterling to go through.
Well, now that we've covered euro dollar as well as the sterling, let's move on to the dollar block currencies of the Aussie, Kiwi, as well as CAD. Given your fundamental as well as technical overview, which currencies are you bullish on right now?
Well, in that group, I think the Aussie probably has the most upside potential, given the fact that we did see an upside surprise to the jobs number out of Australia earlier this week. I think that helped to improve the Aussie's tone in an otherwise volatile market. So I think the pair in general could be biased lower if we see continued weakness in equities both here and abroad. But having said that, I think the Aussie might be somewhat insulated, more so than its other dollar block counterparts, given the fact that the employment number was so good out of Australia this week, and it did have the potential to keep upward pressure on wage inflation in Australia. We're not expecting the news to change the outlook for steady rates from the Reserve Bank, but again, I think it did help to give the Aussie a somewhat more upbeat tone than the rest of its dollar block pairs.
And Omar, let's quickly take a look at the Japanese yen as well as the Swiss franc. For the low-yielding currencies against both the euro and the U.S. dollar, what will be the drivers? And briefly, if you could give us your outlook.
Well, I think as has been the case for the recent past, it'll likely continue that equity market volatility will drive these two currencies more so probably than economic fundamentals. So I think if we see continued weakness in global equity markets, then dollar-yen could easily test that 100 mark again. We tested it yesterday. We didn't really get too far below it, but I think that'll be the next target to the downside for dollar-yen, especially if equity markets remain weak. And I think the same is true for the Swiss franc. We could see the Swiss franc appreciate across the board on more volatility in equity markets.
Okay, and last but not least, before we wrap it up for today's interview, the G7 communique is expected to be issued around 6:30 p.m. Eastern Time today. Well, next week is pretty full on the U.S. data front with data on retail sales, housing, inflation, as well as manufacturing. And we also do have key data coming out from the Eurozone. So what will be key in terms of your focus on the data front?
Well, there is a number of key economic reports, as you mentioned. We have CPI, PPI, housing starts, retail sales, and even the Philly Fed, I think, will be pretty closely watched next week. But having said that, I think we are, at the moment, pricing in very weak U.S. numbers for the near to medium term. We are expecting that the U.S. economy is most likely in recession. So I think that puts the downside risk in the euro, given the fact that the euro has risen to these record highs against both the dollar and sterling this week. I think going forward next week, downside surprises to Eurozone economic numbers could leave the euro vulnerable to a correction lower, especially if we see a weaker than expected ZEW economic forecast on Tuesday and cooler than expected inflation numbers for the Eurozone on Wednesday.
Okay, Omar, thank you very much for insight and analysis into the Forex marketplace, and have a great weekend.
Thank you, you too.
Thank you. This has been your Forex Market Buzz with Omar Esiner, Senior Market Analyst at Ruesch International. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.